Dealing with the KDIC, there's a term that comes up, and the term is that there's something called a Deposit Insurance Scheme. I want you to tell us a little bit about that. What is a Deposit Insurance Scheme, Mr. Maika?
Thank you so much, Santi Sana. So a Deposit Insurance Scheme is a scheme that is established by the corporation through the contribution of banks. Banks contribute premiums every year to the deposit insurance, to KDIC for this matter. And then this money is pooled together and saved or managed by KDIC and into a pool, which is now what is referred to as deposit insurance scheme. This scheme is the one that is supposed to take care of depositors to the maximum of 500 that we've just been told here, in case of there is any unlikely event that the banks goes down. So that is what we refer as a deposit insurance scheme.
Okay.
Yes.
All right, and still with you, we are told by Madam Julie here, and even in the speech from your CEO, we're made to understand that KDIC is very important in strengthening the banking sector and making sure that we, the public, have confidence in this sector. I want you to tell us what other ways KDIC contributes to this, to make this banking sector stable and trustworthy and something that we can all have confidence in.
Thank you. Yeah, for KDIC to contribute to the stability of the financial sector, there are three ways we do it. It starts first with the risk minimization mandate that Madam Julie just told us. So we ensure that we monitor banks every month, every quarter, and ultimately every end of the financial year to assess their risk, to see that we pick at a very early stage what banks are doing, and in case there is any indication that a bank is facing some challenges, then we are able to walk in very fast and help them address that challenge. Number two, if it goes beyond that and in the likely event you find that a bank has some challenges, then we come in very fast to address the challenges that troubled bank is facing. There are so many ways that that is addressed. We can refer to a number of documents. So we also contribute to financial stability by solving issues with troubled banks so that they don't go into the bad state of liquidation. And in the unlikely event that it progresses to that final end of liquidation, then KDIC comes in with a deposit insurance scheme to pay off depositors of failed banks their money very fast to address the challenge before it gets into the whole financial system. Thank you.
All right, thank you, Stephen. Now, I introduced another gentleman to you. I would like to introduce another Stephen. This is Stephen Mosero. Stephen Mosero, we've had a number here, something called a protection limit. Talk to us about that. What is the current protection limit? What was it before? And how does this protection limit look after all of us here?
Thank you very much, Victor. Previously, the limit was at 100,000 per depositor per bank. That was when it was still called a Deposit Protection Fund, a department and Central Bank of Kenya. And as we evolved, we realized that 100,000 was not enough to cover the public and this particular account. So the act was